Hey traders, this is Christian Farmhertz, Tribeca Trade Group, and this is your end of day market recap for Monday, December 12th. Risk disclaimer in front of you. Everything that we're going to be talking about in this video is for information purposes only, not giving out any advice or recommendations. Please read the full risk disclaimer here. So coming into the week, right, when we've got a very large event-driven week, of course, tomorrow we get the CPI report. Wednesday, we get FOMC, and then, of course, quadruple witching on Friday, which, in my opinion, the largest volume will be attributed to the S&P and the NASDAQ rebalancing. Right? I know the option folks likes to think it's all about option expiration, but really, most of the volume, I think, will be driven off of all the rebalancing that is going to happen, the quarterly rebalance in the S&P, as well as NASDAQ. These are humongous rebalances. All right. So, and then, coming into today, you probably thought that, or you may have thought like today's going to be a quiet day. Sometimes that's the case where we have that with the market. And I think when you look at what the averages did today, the S&P was up 1.4% for the day, where we kind of came in flat today. So we actually had a nice trending day today. S&P was up 1.4%. The Qs were up right around 1.3, and the small caps were right there, up about 1.2% for the day. Right. So of course, like I always get questions like, what's going on? Why are we doing this? Why is the market? Everybody always wants a reason. Right. It could be just a little bit of anticipation of what the number might be tomorrow. I think when I talk about a lot of different things, in the weekend member video, right, as well as in the morning. What I had said this morning, was it this morning or it might have been last night? I said, I actually like this. This setup is a little bit better than the market, again, coming into today, right? If we look at how we kind of close the week, it looked ugly, at the end of the week. And what's nice about that is the sentiment is down going into all these events. So sometimes with the sentiment just kind of gets a little bit skewed from one way to the other. And, so what I said was, hey, I would rather have us come in with a sentiment like this, versus, us ripping higher. Now, of course, today we did the rip higher. What was the catalyst for the day? I don't really have one other than there was a couple notes being floated out by brokers. I don't know the merit of these reports, but for these brokers, they like to make calls, right? They like to make predictions, right? So for tomorrow's CPI report, like Goldman and JP Morgan, came out, and I don't know if this was off of like JP Morgan's trading desk, but they said, hey, if the number comes in, the CPI year over year number comes in around 6.7, we're going to rip tomorrow. And Goldman, I think, said something like that too, is that the market's going to rally if it comes in negatives, below 7. Yeah, I mean, they're just throwing out scenarios. So basically, if it does come out, they could say, oh, we're right. Right? Everybody always does. Everybody does this, and they do it on Twitter. They make these predictions so that, hey, if this is going to happen, right, then if X is going to happen, then Y should happen. Yeah, of course. I mean, it's common sense, right? To some extent. I don't think any of them were making a prediction, but they want to be the ones to say, oh yeah, if CPI comes in light, the market's going to rally. I mean, that's pretty much common sense. But it's the same thing with and not to pick on Goldman, but Goldman comes out every time the Fed Fund futures changes, they come out and they basically say exactly what the Fed Fund futures are doing. Oh, well, we think that the Fed is going to raise 50 basis points and then probably 50 basis points thereafter. Right. Well, they're just reading off Fed Fund futures. Right. And it seems like, it would be a lot more helpful for these brokers to be like, hey, this is what Fed Fund futures is implying. This is what we're going with. But they like to make it, they like to be the first one out there, right? To say these things, right? And then if the CPI report comes in for tomorrow, because listen, I don't think anybody has a crystal ball that's going to tell them what the right answer, what the right number is going to be. But if it doesn't come in, if it comes in line or higher, they're going to be like, yeah, well, we didn't, we said if it comes in lower, the market's going to rally. Yeah. Okay. All right. So that kind of clears that up for the session. But yes, there was a couple of headlines that I saw at the end of the day with very common sense type predictions. All right. Obvious predictions. That's also what some of these brokers do. Now, so what do I think about the way that things kind of developed? I mean, I really try to over the weekend try to set up a nice game plan for members, and I have the level of risk. One of the things that I had said, and one of the points that I try to make was have the right amount of risk that you feel comfortable with, right? Have on, maybe some of your higher, more conviction trades. And if you don't have any high conviction trades on, then you just reduce risk, right? I have a couple trades on like CVS, right? Which I just don't think is going to, now I could be naive, but I don't think CVS is going to move like a tech stock, right? And it actually closed on the highs, right? And I've got a couple other trades like that, like today, like I added Ryder as a swing trade and I took a couple targets, because the technical setup looks pretty good, right? I know where I'm going to, I know obviously where I got into the trade, but I know where the stop price is going to be. It's going to be right at the bottom of value if it slides. But I like this slide from 96 down to 85. This company has a PE of like 7, right? They're super cheap. So I added this trade today. I forced kind of 2 targets in the trade today because, a bird in the hand, I was making a joke about this on Twitter. I said a bird in the hand is worth twice than the CPI. The expression is a bird in the hand is worth twice 2 in the bush. And you've got a lot of events this week. So I don't really want to mess around with some of those events. So you take targets, right? And today was, a nice day to kind of forget about what you think is what the number is going to be tomorrow. Take the money and put it in your pocket. That's what this year has been all about, right? And if you haven't traded this year, then I understand that. But if you have traded this year and the majority of this year, then you know that already, right? That when the market rips like this, you take the money and you put it in your pocket, right? And you figure out, you don't have to do that with all of your trades or your whole portfolio, but you do what you think is right. And you understand that tomorrow is a complete unknown, and Wednesday is a complete unknown. So you do what you think is the right thing. Don't get greedy and put a good portion of that, like for me, put a portion of that money that you came in long into today, which I did, put it in your pocket. And not mess around with, oh, geez, like, crystal ball reading about what tomorrow is going to bring and so forth. I did give an idea, right at the end of the day, because someone asked me, hey, do you have a CPI idea? And, I constructed a call fly in the Qs for, where that could basically end up, where Qs could go if the number does really come in light. All right. I didn't put on a put idea. I already have a hedge for tomorrow, so I feel that and it's funny that the way that that different mentalities are, right? Being that I'm not full boat or anything like that into tomorrow, like I'm very prudent, I think, in terms of the positions that I have on right now, because they're like a CVS. I also have XLV on, right? The healthcare ETF, right? These are not high beta trades. So I do want some exposure in case the market decides to rip. And I constructed a call fly based on the Qs, because I think that those will be most sensitive, right? And what was the trade that I put on here at the end of the day? Let's see. Just bring this down here. And very small, right? If you're wagering on this type of stuff, and wagering is a great way to describe it, right? Is to do something like a call fly, right? And I did the Qs 290, 293, 296. So again, Qs tomorrow's expiration 290, 293, 296 call fly for 35 cents. And of course, with a call fly. If you don't know what a call fly is, then I'm not going to explain the whole structure. That you could Google that and figure that on your own. But the most that you could make is the width, right, to the middle strike, right? So you want your you want the expiration to go to the middle strike, which is basically where this version point of control is. The most that you can make is where your middle strike is minus your beginning strike. So that's $3 minus the 35 cents. So that's 265, right? So that's one wager, and the most I can lose on that trade is 35 cents. Okay, and that's it, right? So it's okay to have one of these like lotto type wagers on, but for the most part, it's really just balancing how much risk, right? And if the report comes in hot, like we saw for the PPI report on Friday, right? The positions that I'm holding, I'm okay adding to some of those positions, right? As we sell off. That's the way that you kind of run a scenario analysis, and you think about things in terms of probabilities, right? Because again, I hate to tell you, but no one has the answer on what the CPI report is tomorrow, except for the people who are issuing that, and maybe some of the Fed members have it. But other than that, it's a complete question mark, right? So you think about probabilities, right? And that's how a trader analyzes a situation. You think about things in terms of probable outcomes, and you run a scenario analysis and figure out what the best course of action is and what you're comfortable with doing, right? And that's basically it. So, yes, I'm carrying some risk, but I took a good portion of trades off. And if you want to see the trading blotter, which I try to show in every one of these videos, but I traded a little bit of Oxy today. I said it may be a day trade. Today I thought was going to be a scalping day. All right. So Oxy worked fine for a little bit of a trade. I thought that the energy names could bounce a little bit today after being pretty sold off, and the sentiment getting pretty ugly in that one quickly. Whoops, it looks like I may have made a typo on that JBL. But JBL is another one where it's not an expensive stock. They are going to report earnings this week, but they got over 72. Right, another one in this kind of group too, which is a cheap tech, which I like. Right, is SMCI, which actually did get over the value area. I had this on in my trading account last week. I actually trimmed it and took it off. I still have it on in the TTG trend portfolio, right? Because that's my more longer term geared portfolio. But this did break 89. I know this was being pumped on Twitter, but yeah, if it stays above 89, I'm all about it too, right? And you could see the two moving averages kind of crunched in here, right? And you did get the close above value. Right? Another name too that I like, which again, this is not a sexy name, but it meets my criteria of right now, cheaper tech. It's Cisco, right? Again, it's not a name in a downtrend. It's a name in an uptrend, right? I like the little consolidation in here, a little bit of a move in here. Another name that I highlighted in our midday note was Workday. Remember, Workday saw a big call buying. So first of all, it had strong earnings. Right. So I always get questions on all these names that are in downtrends where people are trying to figure out the bottom. Why not go with something that is showing some life to it? Right now, again, it hasn't really done that much, but this is a keep it simple trade if it gets above, and I think it basically did get right to the 200-day moving average, but keep your trades as easy as possible. Don't go after these challenging trades that, it's been sitting around the lows. Those are the questions that I seem to get a lot of. Hey, what do you think about this name? Well, if it's not above if it's not even like, at least if it didn't cross the 200-day moving average, it's very close, right? If it's not above the 200-day moving average, then it's not going to be a swing trade for me. It's got to be in an uptrend, right? I talk about this all the time in the room, right? I only want to own the best, the best areas of the market. I don't want the problem children, right? If you're the coach of a football team, right, and you've got, you could think about, there's 11 players that are on the field at once, right? So you could think about, okay, now of course you don't have to put on 11 positions in your portfolio, but I'm just using an analogy here, right? You want the best, you want the 11, the strongest players, the fastest players on the field. You don't want to go with some clunker, right, that is at the 52-week lows that you're like, oh, geez, well, it might come back, right? That doesn't mean you put the third string quarterback because, hey, you might think that there's that there's potential there, right? You stick with your stars, right? And you stick with the names that are actually doing something positively, right? I get so many questions every day on Amazon, Tesla. These names are not done going down, right? Amazon, for example, sure, it could bounce if the rest of the market bounces, Amazon will bounce. Why do I know that? Because first of all, Amazon is a big portion of the Qs and things like XLY, right? But if the whole market bounces, this has a good chance, right? But then why not own the Qs, which are probably going to outperform, right? But this thing, so sure, it could definitely bounce, but there are so many better opportunities than the names that are showing the most relative weakness, right? It's down this much for a reason, right? So in any event, just, that's a lot about just how I kind of go over the day. You'll see me trade too. You'll see me put out results. I put out my P&L every month, and I just signed up for the U.S. Investment Championship for 2023. I encourage anybody to do that, especially people that run services. I mean, it's okay. It's great to go on Twitter and say that you called this trade and this trade, and you saw option activity in this trade, but that's fun and games, right? It really comes down to whether you traded it and whether you made money in it, right? And that's what we're about. We're not about hey, I called this because I wrote a note on it. That's great. Of course, we want to help people and get people to make money, but you got to have some skin in the game too if you're running a service. I saw somebody, sorry, I'm going way deep into this, but I saw somebody the other day say, oh geez, well now I'm even, who they run a service, and they're like, well, I'm going to actually start trading. I haven't traded in so many years. I'm like, really? And you're running a service and you haven't traded in 10, now you're going to get started trading. I was like, what? So in any event, sorry to go off a little bit deep, but one of the areas that I thought were going to be a make or break for this week. And again, this is just Monday, but I think watching what these semis do here is going to be very interesting. If you look across some of these names, ACLS was brought to my attention today. This name is trying to break out to new highs. ASML is another name that I'm watching. This is a tough name to trade. It's a $600 stock, but it's kind of a little bit of a proxy for the group. See if it can break 610. I got long UCTT last week, right? Again, which is it's not a major component of the indices, so it's not going to move with the indices, but this was nice. It was up 2.8% today. Also things like, again, probably a name that's not on your radar, but look at this. Look at the tight consolidation in this click. So I'm waiting for this to break outside of the value area in this consolidation, and maybe this thing can move pretty decently, right? But it's got to do it first. All right, so that's just a few names. I also thought the action was pretty positive in biotech today, up 2.5%. HCNP and Coupa kind of helped their respective groups a little bit. This has been back and forth around the 200-day moving average, but there are some names that are showing some strength. Sarepta made a nice turn at the 20-day moving average. That's a name that I got long last week and still holding on to. So that's it for today's video. I'll try to keep it short. And again, keep it very loose this week. Right. If you're really stressed about, hey, I don't have, it seems like there's a lot of fear of missing out on the tape. Right. And it's not a great way to trade. So again, you could put on a small trade in case there is some type of big upside, but really trading with FOMO and without a trading plan is not a good way to be. So, be mindful of that. I thought today was great for, getting out of some risk. Always want to be selling, when you've got a strong day like this, right? And not kind of caught going into an event. All right, guys, have a great night. See you tomorrow.